Hey, what's up? Welcome to DGen Ed. That's degenerative education, meaning none of this is financial advice. Just me having fun looking at charts. And so this is pre-market prep for Monday, April 14th at the start of a shorter week because Friday is Good Friday. The markets should be closed then as options expirations for the week are on the 17th, not the 18th, just so you're aware. But anyways, let's dive into the charts here real quick, starting with the UVIX. This is the 2X long VIX futures ETF, which closed on Friday the 11th at a price of $67.41, being down about 4% on the day. But in the pre-market, we can see that it is now down below $60, down more than 12% in the pre-market. And it does look like, I'm feeling good about this, but maybe I'm wrong. That we are in, this red box now. They're about 2 weeks long, each one of these boxes. A little bit arbitrary. I do draw them myself. But yeah, it's basically just like, there's a 2 week up cycle, 2 week down cycle, 2 week massive up cycle that we just recently saw. And now I do think that this is pulling back. And we did dip below this line here at 54.60, testing a low last week. It looks like on Wednesday the 9th. Of 44.42. I am wondering if we are going to be heading back below that level. I suspect we will as some tariffs get lifted, stuff like that. Markets cool off over again, the next week or two. And then if we do look over at the 10-minute time frame, we can see, trading on Friday here, where it did go up higher, hitting a high of 82.96 before cooling off into the close on Friday, where it held those that pullback before then gapping down, hitting a low pre-market today on Monday of $58.80. So we'll have to see where this goes. I do expect this to be cooling off and, potentially, to be coming back down to this parallel channel that I had drawn here. We did see this massive breakout in August of last year, but we did cool off, pull back, and then kind of consolidate here before we did get this more recent breakout. And so yeah, pulling back, let's see where these alerts are at. One is at 30, you can see that orange line there. The other is at $36.90. Really probably just having fun with the 69 in there. Yeah, I think that this could be, likely will be pulling back below 40 this week, so we'll have to keep an eye out for that. And then if we do look over at the VIX, this is of course the market volatility index, did close on Friday at a price of 37.56, being down nearly 8% on the day. Unfortunately, this doesn't have pre-market data on it, but with looking at the UVIX, I expect the VIX to be down about 6% or so, about half as much as we're seeing in the pre-market, about 12% down on the UVIX there. And then before I do switch over to the VIX, I should just kind of think about, the volume here that on Friday, I guess it's Friday, so you would expect there to be a little bit lighter volume. We did see that. But with that being said, this was kind of like a little bounce here. Volume did pick up on Thursday, but had that big wick to the upside there that we could not really hold. And then we did close below Thursday's close on Friday with lower volume. So yeah, that does suggest some weakness. And, basically the same pattern here with the VIX. And then levels to the downside, looks like around $28, got that red line there. And then around 24, got that orange line. But then, of course, $20, that is kind of a key level that I suspect we might be getting below. Maybe not this week, but in, let's say the next 1.5, 2 weeks or so. I think that we will likely be returning to 20, but that doesn't necessarily mean I think it's a good idea to short the VIX. So here looking at the SVIX, this is the -1x short VIX futures ETF. So it's no leverage. That's what the -1x means. Just short the VIX. This did close on Friday at a price of $10.63, being up about 1.25% on the day. Pre-market, just kind of the opposite as the UVIX. This is up about, less than 6%, but 5.6%, and trading around $11.23 in the pre-market. And so I had talked about some levels, I believe on Friday pre-market prep, that this could be potentially bouncing to. And let's see, that is really just going to be based on this Fibonacci retracement here. That's in red. We've got the 236 here at $12.63, and then the 382 at $14.69. And then in yellow, I have this Fibonacci extension coming from up here, going down to, full extension, 100% extension would be around $14. And so far, and I don't expect we will, the 1618 from that is at $8.18. We did hit a low on Thursday of $9.30, and so that is what this red retracement is based on. And so I believe on Friday I had talked about potentially, exiting my position around 1469. But the reality is I suspect that it will get into some resistance around 1260. That does correspond not only 1263 with that 236, but also this red downtrend that I have drawn here based on the lows, I believe from, I was thinking April, but this is actually August 23rd of 2023. And then October, excuse me if I said August, October 23rd, 2023. And then over here, this is August 5th, of course. Those two pivot points make that trend line. And so with that and that 236 there, I think that 1260 is probably going to be some resistance. So it's quite possible I will exit my position at around 1260 just because, while I do think that we're going to be seeing a bounce in the markets, and with that corresponding with the UVIX pulling back in this red box, given the current president, Donald Trump, things can be a little volatile with him. So I think it's actually a really bad idea to short the VIX, and because this can just, long term be a bleeder. So I think that, if I am bullish on the markets, or if I do want to short the VIX, I don't necessarily think this is the best thing to do. I think it's better to just go long positions, not go short the VIX. So I, might be accepting a loss on this. I believe my average is below 14, but I think it's somewhere between 13 and 14. So it's possible I'll take a loss at around 1263 if it looks like it's getting into some resistance there, but I'm also going to be at work, so I won't be paying attention to this too closely. But I believe I have a limit sell order for all of my position at 14. Maybe I could get some extra gains at 1469 or maybe even higher. I just don't think that the risk is worth the reward, so I'm just looking to exit this. But then looking at this on the 10-minute time frame, really just being kind of the opposite of the UVIX, but just half of the range. Did pull back into the trading on Friday, hitting a low of 971 before going higher into the close, holding those gains, and then gapping up into the pre-market. Again, I believe that is on news that some tariffs may be lifted based on, the technology and whatnot. So I think that relieves some tensions. But anyways, let's look over at the SPY. This is the S&P 500 tracking ETF, which closed on Friday at a price of $533.94, being up 1.78% on the day and continuing up about 1% more in the pre-market, trading around $540 a share. And let's see, I'm wondering if this doodle that I drew will be playing out. So far, it does look good. We did get a test of that 50% retracement at around $515.21, hitting a low on Thursday of $509.32. Let's see. We do see bigger volume here with this big green candle, and then volume kind of cooling off. So maybe we start to see a surge, ideally getting above 550, the red line there, the 1618, which is based on this retracement over here. You can see that line there, and the 1618, 550 also coinciding with that orange uptrend. This one going back to, I believe, April 19th, yes, and the low of August 5th. So, we'll have to see where this takes us. I'm feeling pretty good about it. If we look at the 10-minute time frame, this one actually didn't, sell off too much into Friday before bouncing. It was just kind of hanging out around that 382 there, marked around 523, then bounced and then held gains into after hours on Friday before gapping up into Monday, hitting a high in pre-market of around $542.20. So pretty neat to see that. We'll have to see where it takes us. And then real quick, let's just look over at the SPX. This is, of course, the S&P 500 index, which closed on Friday at a price of $5,363.36. Kind of interesting with those 3s and 6s there. I don't know. Yeah, it did go up 1.81% on the day Friday. But really, I mean, looking the exact same basically as the SPY chart. It does look like the 1618 here is maybe a little bit offset, maybe a little from the orange line. I don't know. I could flip back and forth and they're all basically the same. But anyways, that 1618 level is at $5,542.10. So maybe we get rejected around $5,550, somewhere around there. And so the next one on the list is going to be Bitcoin. I was kind of intrigued by this because I was seeing, CME gap formed around 83,825, give or take, and that is going to be based on, the closing candle on, April 11th, Friday at 5 p.m. Eastern. We did, form that gap there, but I believe, today's the 14th. It looks like, approximately filled that gap already. We are just a little bit above it. I don't think it's a good idea to short this. I'm not going to be because we're so close to that gap fill if it has not already been filled. And actually, the 5 p.m. Eastern here for when that CME gap is formed. So if we adjust that time 7 hours into the future, so that would probably be GMT time, Greenwich Mean Time. I don't need to say time. Let's see. So this would have been, a gap fill, UTC, GMT, or Zulu, whatever way you want to say it. That gap has been filled. So, but if we do look at this, on the 1 hour time frame, we can see that we've broken out from that red downtrend. Does look like we've got a retest, bounce. Maybe this is putting in a head and shoulders pattern though, so maybe that's a little bit concerning. And looking at this on the hourly, I could actually see this coming down to more properly retest this red downtrend, maybe coming down to around $81,500. And so maybe I will just doodle that so we can revisit it tomorrow. I would think something like that could be in store for us, so we'll have to come back and see. But like I said, I don't necessarily think this is the best thing to be shorting, with it being at 84,600. One way to short it was with Biddy, the ProShare short Bitcoin ETF, ticker symbol BITI. This trading around 25.29. In the pre-market 25.16. But again, and this is not leveraged. SBIT is 2x leverage. This is the ProShares ultra short Bitcoin ETF SBIT. But I don't think it's a good idea to really be shorting this for a CME gap fill because we've effectively already gotten it. And the downside move here would be about 4%. I don't know. You do you, but I'm not going to be shorting Bitcoin. And then let's look at Ethereum really quick. Trading around $1,660. Does look like it's still below that orange trend line, but it is above these two green lines. One of those being the high from, if I do switch over to the weekly, to the prior cycles high. If we're, 2 cycles ago, because we did have this high over here, around 4,800. But the high over here from 2018 was at a price of $14.2430, right around there. And that does intersect with this green uptrend, which I have drawn based on the high from 2019 and the low from 2022. Got a confluence of levels there, and so far they have acted as support. So yeah, I mean, I feel like this is just still, good dip buying opportunity because I think that this could go massively higher. And if I do switch back over to the weekly time frame, we could see that, this intersection, that line there for the start of 2024, got that date of January 4th there on the weekly time frame. So the first week ending in January. That intersection right there looks like it's at a price of $8,400. So from current price, I do think there is a lot of upside potential, even just getting back to those all-time highs, or even these most recent highs around 4,000. That's more than a 2x from current price. So I think that there's just a lot of upside opportunity with Ethereum, even though it's boring, even though people think it's a stable coin. I think that it's just a really great opportunity right now. And then so now to finish this off, let's go over ticker symbol URA, which is the Global X Uranium ETF. Closed on Friday at a price of $22.65, being up about 5%, and then going up about 1.5% into the pre-market, trading around $23, which does look like maybe I've got an alert here at 23. So yeah, and then above at 25 here. That I think would be some more notable resistance. So maybe, we see something like that. And yeah, with that being said, I am going to end the stream here, but I did just also want to point out I will be posting a poll later today to get a request for a ticker this evening. So make sure you follow me on X, dgen_AN for Andy, because dgen ed was taken. So yeah, make sure you follow me over there. Check out that poll and stay tuned for some videos later this evening. But as always, those are just my thoughts. If you found them helpful, make sure you like the video, share your thoughts in the comments down below, and make sure you subscribe to the channel for more videos like this. Thanks a lot for watching. Have a great day trading. Take care, you guys.